This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. And thank you to Mercaris.
Hi, this is Ryan Koory, the Director of Economics here at Mercaris with your monthly U.S. Organic Market Outlook Update. Starting off, just doing a quick update on the weather situation here in the U.S. Essentially, as we move through this spring, we're just seeing a bit of an intensification of what we talked about last month. Some of the areas, particularly towards the west and up into the northwest, the Dakotas, where we've been talking about some drought conditions building, those have definitely increased over the past month, particularly throughout the Dakotas, where now the majority of North Dakota and an even larger swath of South Dakota are looking at that D3 range, extreme drought range. Looking a little bit farther to the east, looking along northern Illinois and northern Iowa and southern Wisconsin, we're starting to see a little more drought there too, an increase in the D2 drought level and the D1, which is moderate to severe drought. And then looking over into Michigan, again, we're just seeing a further increase in that drought conditions with more of the state creeping into that D1 drought range. The other element that we'd like to talk about this month is beginning this May, Mercaris is going to begin releasing monthly U.S. organic dairy update reports. In these organic dairy update reports, we'll be providing pieces of information like fluid milk prices, contract pay prices for organic fluid milk, as well as values from our monthly or quarterly organic cream auctions. Looking at the data that we collected for the month of April, we estimate that over April, the spot price for organic fluid milk in the United States averaged about $32.25 per hundredweight. Looking at the pay prices, contract pay prices that are being set by organic dairy purchasers, they're averaging somewhere around $31 per hundredweight over the first quarter. So what we're kind of seeing right now is the spot prices are averaging a little bit higher than the pay prices. Some of those prices we may start to see a little bit of downward pressure as we move into May and June. Essentially, we're starting to see some indications that potentially the demand growth that we saw following COVID is starting to slow down and some consumer demand is returning to some pre-COVID levels. And that, in addition to the fact that we're entering the part of the market where you start to see the spring flush, those two factors are likely to start weighing on that spot price as you look over the next couple of months.
Those drought conditions throughout, especially the northern part of the United States, may impact some of that spring flush, but a lot of the dairy cows that would be in the organic system right now would not be in those states. So, any indication of that shortage may have come from just a seasonality is what you're essentially seeing, and spring flush volumes could drive those spot market prices down again.
Yeah, what we've seen, if we look at essentially the best barometer that we have is the fluid milk sales numbers that the USDA puts out. And if we look at organic fluid milk sales over the month of March, which is the most recent month, it came in at 255 million pounds, which is relatively high historically speaking, but it's even with where we were in March of last year. And that's a bit of an indicator potentially of the fact that we're seeing consumer demand slow down. This is the first month really since February of last year that we haven't seen those fluid milk sales numbers be up anywhere from 7 to I think 12% year over year. So, with that, we definitely saw that ramp up last year in consumer demand, and that put some weight in the system in terms of helping to support some prices. But, we haven't seen it retract yet. But if you lose growth in that number, that's where you start to see maybe the first signs of prices starting to soften. And if we start to see maybe it slip back a little bit, April, May, June, as things warm up and as people, again, we've talked about this in the past, but begin going back out into restaurants and eating food away from home, those factors from the demand side could start to slow down that demand for organic dairy products. And then, coinciding with this point in the year where you are entering the spring flush, and even though we do have some substantial drought, and in some of the areas now that we do produce a fair amount of organic dairy, you're talking around the Texas Panhandle and places in that area and out into California. But even with that, you're dead on. If you're talking here in the Midwest, a little bit of drought that we have, it's probably not going to curtail organic dairy production too much. And so, you'll have a little bit boost to supplies seasonally due to the flush. And it looks like it may be coinciding with a slowdown in consumer demand growth at least, and maybe just a dip in consumer demand overall as the effects of COVID-19, which really ramped up the market last year, seem to be subsiding.
Now, speaking of milk supply, a big part of that, what impacts the volume that's coming off farms is forage and forage quality, forage availability, forage pricing. Is that something that in the future you'll be looking to get a little bit more information for not only purchasers of organic milk to use, but also farmers as well?
Absolutely. One of our ambitions with launching this organic dairy report is being able to collect more pieces of market information to help everyone create a clearer picture of exactly where the market's sitting. And at the moment, we're able to report basically your staple organic feed, corn, wheat, soybeans. But one of the markets that has been historically way underreported is that forage market. And it's definitely our ambition with this report to use it as a vehicle to start leveraging it and build a tool for farmers so that we can start collecting those forage prices and put that picture together as well. And again, just help round out and add a little bit more information for those who are working within the organic dairy sector. So moving on and looking at the ongoing situation we have in the United States with the organic soy supply. One thing that we did at the start of this month is with April's trade data, we really tried to just lay out all the different pieces of information that we have within the market to try to trace back exactly what's going on with U.S. organic soy supplies and potentially what we see going on with prices and what the catalyst is there. So what we did was, first off, taking a look at India, because there's been a lot of discussion around India and risk with respect to Indian supplies, particularly with the USDA's announcement back in January that it was ending its recognition agreement with the ADEPA. And recently we've heard discussion around the generation of countervailing duties and anti-dumping duties against Indian organic soybean meal. Again, a thing that could potentially threaten the price and the supply of those imports in the U.S. market. And although those things are really potentially impactful and important to keep an eye on, what we see so far this year, and really since the January announcement by the NOP, is we don't really see any real strong evidence that it has been Indian supplies that have impacted the U.S. organic soy market. So what we did was looking at trade data really from February through April of this year. So taking the month after the USDA's announcement and looking at U.S. organic soy imports from India, looking at meal and soybeans combined. What we estimate is over February through April of this year, the U.S. has imported somewhere around 108,000 metric tons of soybean and soybean meal from India, which is up 10% year over year. In addition to that, taking a look at prices, What we see is the SIF price, so essentially the price of organic soybean meal delivered to U.S. ports, averaged about $655 per short ton from India over March, which is down 2% year over year. And then looking at soybeans, whole beans coming from India, they came in at 1910 per bushel, which is down 10% year over year. And so looking at the trade data that we've had from India since the USDA's announcement, there isn't anything in the trade data to suggest either we're seeing a reduction in imports from India, again, where we continue to see record levels, or that we're seeing prices from India or within India beginning to escalate, because again, we're seeing prices that are below where we were last year. And so really the trade data is not pointing to India as being a source of the current market disruption. Well, taking a step beyond that, because a lot of the market disruption that we're seeing right now really lies within the meal market, and it's the ability to crush soybeans and to supply meal domestically. And so looking at what that meal situation looks like, well, okay, again, you kind of have to start talking about India again, because historically India has sourced or provided us somewhere around 80% of our organic soybean meal supplies. Well, if we look at organic soybean meal imports from India, again, looking at February through April, we can see that the imports of meal have been up 20% year over year. And that, again, those prices, they were down 2% year over year through March. And furthermore, if you look at really this marketing year in total, from September through April of this year, the U.S. has imported in total somewhere around 313,000 metric tons of organic soybean meal, which is up about 58% from where we were at this point last year. So taking India off the table and taking soybean meal imports off the table really doesn't really look like the current market situation can really be pinned on either supplies from India or soybean meal imports in general. The one thing that we did notice within the data, and I think is pretty telling, is the importation of organic whole soybeans has been on the decline this year. And this is pretty substantial. We estimate that over the 1920 marketing year, somewhere around 75% of U.S. organic soybean crush was sourced from imported beans. Well, if we look at imported organic soybeans this year, so far through this marketing year, they're down about 24% year over year. And with 75% of our crush being imported beans, that 24% reduction, that is a pretty substantial tightening within the market. And if we try to figure out exactly where that reduction in imports is coming from, we can pretty squarely hang that on Argentina. Looking at last year, imports from Argentina accounted for about 35% of our total organic soybean imports. Through April of this marketing year, imports of organic soybeans from Argentina are down 68% year over year, pretty much accounting for that entire 24% decline. So really, as we look at where the market is right now and what we see going on with prices, it appears to be a domestic crush situation, and it appears to be originating from a lack of soybeans. And some of that lack of soybeans clearly seems to be due to a reduction in imports from Argentina. So really the questions that we're kind of left with in terms of understanding what's going on in the market now and potentially what may happen over the rest of the summer is, where are these bean imports from Argentina? And why have they not been arriving at U.S. ports? And once they do start to arrive at U.S. ports, if they do start arriving in the near future, exactly what's that going to do to U.S. supply and what could be the potential supply or price implications as a result? I think those are the bigger questions to kind of be asking right now as we look at the summer. As we walk through really what we've seen with this trade data, it really does look like the only place that we see a reduction in supply so far is in the whole bean market, particularly from Argentina.
Well, that's really interesting, Ryan, because I know a lot of the narrative right now is certainly behind exactly what you said, that India is the cause of this soybean meal shortage and the pricing skyrocketing, doubling almost on soybean meal in particular. So, you asked the question of where are those Argentinian soybeans, and also what's going to happen when or if those beans hit this market. Well, I think the most immediate reaction is prices will drop significantly. So what could be the impact of all that happening in a very short period of time?
Yeah, it's really kind of a matter of of timing and pace. And really, it's a factor of exactly what is this bottleneck. One of the fundamental problems that we have trying to understand what's going on with U.S. organic markets is the fact that so much of it is impacted by imports. And we do have so little data clarity around exactly what's going on in foreign organic markets. These Argentina beans, did they just I know Argentina had some production issues last year and their yields weren't quite as great in the conventional sector anyways. How much of that relates back to what's going on in organic? I can't see, or I haven't seen anything that would suggest a 68% reduction in exports to the United States. That doesn't really seem to be anything that would make sense. And so if they did produce these beans, are they sitting in Argentine, silos at ports? Are they waiting for container space to get shipped to the U.S.? Have they been shipped to other markets? Did Europe snatch them up, or did they get shipped to China? We just legitimately don't know. If we kind of take this and turn this into two scenarios, one being, okay, well, these beans have been spoken for and they've already been shipped out, then really what we're talking about is a market that's going to continue to be tight on beans through the rest of the summer. And we may start to see an increase in importation from other countries that could potentially ship us beans. Historically we've imported a fair amount from Canada, and we continue to do that. That Canadian trade relationship remains strong, but not too long ago, the Black Sea region was a major supplier of organic soybeans to the United States. And over the month of April, we did see an uptick in import activity from the Black Sea region. We're looking at meal, organic soybean meal imports from the Black Sea region. They reached their highest level on record over April. They reached about 12.8 thousand metric tons. Similarly, we saw soybeans, whole beans from the Black Sea region pop up over April. And so maybe we'll start to pull some in from other ports. However, if we think about the potentiality of these beans just sitting in Argentina because the global supply chain is so bottlenecked right now and there's just not sufficient container space, once this bottleneck breaks through, you'll have beans sitting in Argentina that were presumably purchased at around $20 per bushel, and a U.S. market that is demanding $30 a bushel for soybeans. And so that could act as an impetus to quickly get those beans to the U.S. market. And if that occurs, you're probably talking about something that, if it's going to occur, will likely not occur until we get to July or August. So you could start to see, if this is the case, a substantial number of organic soybeans hit the U.S. market sometime around July, August, September, October of this year, coinciding with harvest. And if that's the case, then that could be a catalyst for significant reduction in soybean prices in the U.S. right about the same time that we're starting to hit harvest. And so that I think as a potential market risk is definitely something worth keeping an eye on and keeping in mind right now. Because as we look at where that tightness in supply is in the U.S. market, it pretty clearly seems to be in whole beans. And a lot of it seems to be due to the fact that it's Argentine supplies that just aren't making it to U.S. markets.
Yeah, well, you stated it there that this could be. I'm certain that a lot of the users of soybean meal would be very excited to see a flood of beans hit the market at this point in time, where they are very, very tough to come by. But the farmers that are sticking their necks out there and putting beans on the ground right now may see quite the impact of what they're anticipating right now versus what could come harvest time, if that scenario that you mentioned plays out, of a lot of beans hitting the market at the same time right around harvest.
One interesting trend that we've seen within our pricing survey is we're starting to see food grade beans be contracted into feed marts. We've seen a couple examples of that. And I was having a conversation with somebody last week that was asking about the ramifications of this market phenomenon on the food grade soy market, And essentially my take on that situation is you're not likely to see a wholesale switch of, people who'd be growing food grade beans, and they're just not going to plant the plant feed grade this year. But you'll probably see some marginal shifts. You may sign a slightly smaller grower contract with whoever you've contracted in the past, and try to hold on some more in case you can sell them for 30, 32. I've heard people talk as high as $35 a bushel come harvest. That's a pretty big incentive, especially since feed grade beans just take less work. That said, that's a pretty big gamble if you kind of lay out all these potential supply risks and the possibility that, if this supply situation goes hypothetically, in the worst way possible, you could be talking about $17 soybeans come harvest. And so passing up a contract for food grade where you could be getting a guaranteed 24 or 25 because you are optimistic about getting 30 or more when the market crashes, it's an unfortunate thing because it makes for a very challenging atmosphere for growers to navigate and purchasers to navigate too. There's just a huge amount of uncertainty, and yeah, it's definitely a situation that I don't think I would be overstating it to say concerns me a little bit, and it's definitely something we're keeping a really close eye on this summer, just as this thing continues to unfold.
Just one other thing to mention would be some of those alternatives to soybean meal that are limited in availability in the organic market, but things like canola, cottonseed, things along those lines that could be used in place of soybean meal. Those prices are starting to climb as well. And if any farmers are thinking along those lines of supplying a market that could use that product, and then all of a sudden soybeans become drastically more available and cheaper, they may also be impacted as well. Yeah,
absolutely. There's all kinds of potentials for this very unique and disruptive situation to have various forms of collateral damage within the market as it spins itself out. So it's a grower beware, buyer beware for sure. Just to wrap up today's discussion, taking a quick look at where we're seeing organic feed prices as we roll into the month of May. For the 2-week period ending May 1st, the Mercaris market price survey recorded the average price for organic feed grade corn delivered to corn bed elevators at $8.44 per bushel, which is up about 69 cents per bushel from the pullback that we saw at the start of April. If everyone remembers, we did see a bit of a downturn in overall contracting, and prices softened a little bit right there at the start of April, but they've definitely rebounded, and we've seen contracting pick back up, and prices remain fairly supported with that. Organic feed grade wheat markets are still relatively quiet. Over the month of April, we saw prices average somewhere around $7 per bushel delivered to U.S. organic corn belt, which is pretty far below the price that we're seeing for organic feed grade corn. One thing that we're going to keep an eye on is we've known over this past year, wheat protein levels have been really good and milling demand has been pretty high, and corn prices were lower. And so in that context, what we saw is just the feed grade wheat market dried up a bit. But now that feed grade corn prices are picking up, and there's some question around the overall quality of this year's wheat crop, particularly with some of the cold situations and the drought situations we're seeing. Maybe we'll start to see that feed grade wheat market pick up again, and see some more interest and demand within that atmosphere. And then wrapping up with soybeans, over the month of April and into May, we're continuing to see that market rally. For the 2-week period ending May 1st, our market survey captured organic soybean prices delivered at around $26 per bushel to U.S. Corn Belt elevators, which is up about $2 per bushel from where they were at the start of April. And with that $26 per bushel average, we're seeing contracts anywhere from $24 to $29 per bushel. And we're continuing to see monthly gains month over month in terms of that price for the U.S. Corn Belt. And we continue to see and hear from purchasers that it's getting increasingly difficult to source beans in the U.S.
And certainly beans we've talked a lot about, but back to the corn situation, that is good to see that prices started to creep up a little bit, especially with conventional and non-GMO pricing happening, getting up in that, I don't even recall what it is, $5.50 to $6. There was certainly some concern that there might be some farmers that pull the pin on organic and switch back to conventional with that pricing difference narrowing so much. But is there any indication at this point, or is it too early to tell as far as acres or U.S. domestic organic corn supply?
Yeah, from a domestic supply perspective, we don't really know what acres look like yet. Our best barometer for acreage is data that we collect in terms of how many acres are certified for different crops within the United States. And that's information that we collect from some of our accredited certifier data partners. And we really don't start to see that data roll until around July. So in a couple of months, we'll be able to give you a notion of exactly what that looks like. But, looking at the broader supply picture and really what we're seeing in terms of the support within organic corn prices, it really appears to be a continued reduction in imports. Imports are just not nearly as prolific as they used to be and not as important to U.S. markets. If we look at April, we estimate that total U.S. organic combined whole and cracked corn imports reached about 31,000 metric tons, which is down 50% year over year. And really what you've seen, and this is kind of a parable of the two markets that we've talked about before, but within the U.S., organic cracked corn is becoming its own, unique market. We're really not that tied to foreign supplies anymore. It really is about domestic production and domestic demand, and imports continue to drop off. Part of why we saw price fall so bad over this last year was we did anticipate a short production during the 2019 harvest, so we ramped up imports, and that put us in a long position last year, and that's just dried up. Imports continue to fall off, prices are firming up, and potentially we'll see a really good harvest this year. I'm not super optimistic about that. I think yields will probably trim things just based on the fact that we're seeing substantial dryness in some areas, and then planting's gone pretty quick, but it's been followed by this cold period where emergence is being delayed. So yields will probably be fine, but I don't think we'll see bin busting yields. And we'll continue to add acres, but we're also continuing to grow demand. So corn prices will probably be pretty stable. But soybeans, where we do continue to import a huge amount, small disruptions in terms of either logistics or policy, as we're witnessing now, are causing huge disruptions in terms of supply and prices. And so while corn is probably going to remain relatively stable and supported for this next year, soybeans, it's going to be a bumpy ride. The roller coaster's not over. So, keep all hands and legs inside, because it's a little bit dangerous out there.
And I'm sure we'll be continuing to talk about that soybean market coming up in future updates, as well as all the other stuff we talked about today. And Ryan, really appreciate the information. A lot of really good stuff there, and stuff that we'll be continuing to follow up on future market reports. And thanks a lot for listening.
Thanks, Brian.